What Dell is doing is it is essentially going public again by acquiring that tracking stock, which is meant to mirror the value of VMware. Now recall that Dell owns a controlling stake in VMware via its buyout of EMC, which happened in 2016. Now, a lot of people had thought it would also acquire VMware or somehow combine with VMware in this process, and it is not doing that. VMware will remain a publicly traded, somewhat independent entity.
Now, what does it list then? A new class of shares, Class C shares. I mean, Dell is just a master of, I'm not sure if it's fair to call it financial engineering, but it's certainly some kind of financial innovation.
Yes, I definitely think financial innovation, engineering, whatever you want to call it, there's a lot of moving pieces here that's not necessarily creating something that new. It's more a means of consolidating these different parts, these different interests in Dell's empire. Now, there's a benefit to that just in lessening the complexity and just sort of a realization that the structure that they had was intermediate. It wasn't meant to be a long-term viable structure for this company. But what this does not do is necessarily mitigate Dell's debt load, and that was a lot of the reason why they were looking at some of these transactions in the first place. So they're still going to have to figure out how exactly they deal with that. Also, tax law changes that have made, deducting the interest on that debt significantly more expensive for Dell. There's not really an answer yet as to how they're going to solve that. So, I mean, this seems to be the best outcome in terms of satisfying VMware holders who wanted to remain independent. But in terms of Dell, it's still going to be a very complex company with a convoluted structure, a lot of debt pressures, and just a need to sell its story to investors.